Hello and welcome to Trading Hour. We're coming to you live from the CNBC-TV18 Motilal Oswal studio. I am Reema Tendulkar. With me is Hormuz Fatakia. And as we speak, at 11 o'clock, the Nifty is at that 24,400 mark, a cut of about 63 points, 0.25% gone on both the benchmark indices, and the mid-caps are underperforming today. That's down close to about 0.8%. It almost feels like yesterday we took 2 steps forward and today it's 1 step back. We've not given up all the gains of yesterday because yesterday the mid-cap index was up, 1.8, nearly 2%. But half of the gains of yesterday have been given up today. So some amount of profit booking. And the sectors which are weak are PSU banks, realty, capital market plays, the pharma index, the oil and gas index. These are the sectors under pressure. On the way up, it's all about auto. It's not just M&M, but even a Hero MotoCorp, Eicher Motors up in the green. And the FMCG index is evenly balanced.
They're biding their time, are the bulls. They're waiting for more clarity to emerge on what's happening at the border. There is also the mock drills that are going to take place tomorrow. So that bit of caution is still prevailing on the street. Of course, we are at yesterday's low, mind you, which is at 24,400. So that's the first line of defense that the bulls have for the index, and that's showing up as well. So indeed, 24,400 is where the index is, but there are plenty of stock reactions that are taking place, and the stock specific reactions have continued regardless of how the index has moved. CCL products, of course, there are plenty of earnings reactions like these. CCL products is now up 14% as that the highest point of the day after its results reaction. So that is a positive result reaction that's coming in. The negative one though is Cummins India, that has seen a slight recovery from the lows of the day, but it has still holding on to losses of around 4.5%. Yes, it was down at 7% at one point of time, and of course this is after the parent company suspended its guidance. So that is a bit of a negative rub-off that we are seeing on Cummins. And the other one is Paytm, that's down 4% as well. Both Nigel Manglam highlighted this a few minutes ago on Chartbusters as well, that the lowest point of the day is Paytm reporting results today. So there are a lot of broader market names that you need to keep an eye out for in terms of results today, Reema.
Okay, so let's get in our first corporate conversation based on the numbers that are already out. The management of Kalyani Steel, the company reported a steady Q4 with profits seeing a 26% uptick. Margins expanded 300 basis points. We have with us Mr. R.K. Goyal joining in to talk about the quarter gone by. Thank you very much, sir, for joining in. We have the Q4 numbers, but if you could give us an indication of how Q1 is going to pan out for you in terms of volumes, realizations, what are the trends that you're seeing?
Good morning. As far as Q1 is concerned, I think it may be similar to Q4. We are expecting production performance to continue the way it was there in Q4, and market and all to be steady and stable. So we will have some similar performance.
Mr. Goyal, good morning. Thank you for joining in. How has demand looked like on ground so far? How was it in the fourth quarter, and how has it been shaping up in the last 30-35 days of the ongoing quarter, particularly with regards to all the tariff-related dramas that you have been witnessing across the globe and the auto sector as well? If you can tell us, what is your exposure to the auto sector and how has demand shaped up?
As far as we are concerned, our auto exposure is almost 80%. And definitely these tariffs from US will have impact on industry, Indian auto component industry, which is exporting almost $8 billion worth of goods to US. So this may have impact. Definitely in short term, people will be cautious, even though there is a window for certain 3 months or certain number of days, whether they should export, they should not export. But at the positive side is what are the alternatives with the US? I don't think anybody can increase supplies to US where duties are lower. All other people who are supplying auto components to US has similar duty or higher duty. Until there is some slowdown in US about purchase of automobiles or auto production, exports from India in one way or other may continue. And hence, I don't see substantial downside in this part. And as far as the price part is concerned, yes, there is a pressure. But at the same time, raw material prices are also stable or going up. So costs are not going to come down. So we see it's a balanced quarter. As far as the domestic market is concerned, yes, you must have seen last month's number. There is definitely a slowdown, but that's typical of April, as people like to dump their inventory in March on their customers. So it's okay, it's normal, and we expect things to be normal.
Okay, so far things are, going on as, it's status quo. What about price increases? I think you said costs are likely to be under control or similar to what they've been. Did you manage any price increase going forward? What is the outlook on price increases? And will you be able to maintain margins? Your margins spiked up to 21%. What led to that?
It's very, very difficult to say whether we will be able to maintain exactly the same thing, because the market dynamics is not in anybody's control, but we are putting our best efforts to ensure that whatever performance we have in the last quarter, we'll put all efforts to ensure that we have at least similar performance.
Mr. Goyal, over the last 3 years, your annual top line has been around about 1,800, 1,900 crores, 1,900 to 2,000 crores, if I can say that, over the last 3 years. Now, you are at 100% utilization levels. Now, and also because of the top line growth being dependent on pricing, are we bracing for FY26 to be a similar flattish sort of top line growth here, or are you penciling in slightly higher top line, say within the 2,000 to 2,500 crore range?
As far as we are concerned, we are definitely trying to improve the bottom line at least. As you have rightly said, top line is not in our control, as it is a market-driven prices and capacity utilization is close to 100%. But you don't know what sort of dynamics happens globally, what sort of geopolitical situation is, what sort of tariffs on China from US and some other European countries, what sort of tariffs on India and quantitative measures. So it's a highly turbulent and volatile situation. In this, commenting anything is very, very difficult. Only thing which is positive is we have a highly motivated team. We are putting all efforts to ensure that we perform better.
What about organic and inorganic expansion plans, Mr. Goyal? You had mentioned earlier to us that by 2028 or 2029, Kalyani Steel will be a 1 million tons per annum company. Are you on track to achieve that? And if so, is there any inorganic growth plans that you have lined up for FY26?
As far as 26 is concerned, I don't see anything substantial to happen. But a lot of things are on the drawing board, and as soon as we are able to conclude something, we will come back and inform everybody.
Mr. Goyal, any capacity expansion plans for your own?
It includes everything, whether capacity expansion, whether it is inorganic growth or everything. It is on the drawing board, and we have not been able to conclude as of now, but we'll come back shortly.
But this 1 million ton target stays, right, by 2028, 2029?
Target is definitely there. It stays, but we are working on it. So we will announce when and and what sort of cost and what sort of product mix, what sort of... We'll come back to you.
Is the current uncertainty a reason why you are perhaps holding back from making any firm plans or commitments in terms of expanding your capacity?
Yes, current situation, geopolitical situation within the country, situation with our neighbors, everything is a concern.
Okay. What about the Odisha project that you signed about a year back? Have you firmed up funding? What is the timeline for this capex to come on stream? And if you could give us the breakup of how you will fund it between equity, debt.
We are working on the finer details. And once we are able to do that, then we will be able to come out and say, yes, we are going ahead with the project and we are putting up this project and this is the total project cost. Few more months it will definitely take.
So by the first half of this year, we'll have more clarity on it. First half of FY26, Mr. Goyal?
Absolutely. It is like that. We are trying to expedite it as fast as possible.
Now, what about Kalyani Steel, Mr. Goyal? Have you closed that acquisition? When does it start contributing to your balance sheet?
As I mentioned before, Kalyani will be part of our Odisha project. It's just a belt shop. It will be integrated with our Odisha expansion.
All right, Mr. Goyal, thank you so much for sparing time and joining us today. Wish you good luck for the rest of the year as well. And the management there of Kalyani Steels expecting market dynamics to remain stable as the fourth quarter was as well for the company, and expecting to make efforts to improve the bottom line because the top line growth is a function of pricing. So the stock there 0.7% lower as we speak now. But by the way, there has been a substantial recovery from the lows for the Nifty, still around that 24,400 mark. What's also not doing well today though is Indian Hotels. That too is now among the top losers on the Nifty 500, 4.25% lower there as well. Godrej Agrovet is seeing a bit of a rebound after the hammering that it had taken post the results, 5.5% higher on that stock. And RR Kabel continues to move higher where it left off yesterday. Strong session yesterday, another 5% added in today's session as well. Take a short break. On the other side, we tell you more buzzing stocks like Coforge and M&M and why they are buzzing in today's session. Stay tuned.
Welcome back. Let's focus on JSW Steel and the Bhushan Power acquisition case. The Supreme Court has scrapped Bhushan Steel resolution plan. The government is now mulling options on how to approach the judgment. Also, sources tell CNBC-TV18 that the bankers, PNB, State Bank of India, are likely to file a review petition in the Supreme Court on this order. Sapna Das is now joining in with the latest developments. Sapna.
Yeah, that's right. We are given to understand separately that probably PNB and SBI will be taking action soon in terms of a review petition on GST ruling. No timelines mentioned as of now. It's early days, so we'll have to see how this really rolls out. But this is something that the banks will be completely in consensus on. Having said that, if you observe what the government, basically the DFS Secretary yesterday in Bombay has commented, and he has made it very clear that, they have already reviewed the judgment order with all the lenders, and a view is being taken within the government. Of course, the opinion or the legal opinion has also been taken on board, and very soon the government will take a call as to how to be, what kind of approach can be adopted on this front. So I think this is clearly a developing event, a developing story, and we'll have to keep a close watch on this. But both government and bankers completely on board in terms of taking further steps. And as I've just mentioned, separately sources have indicated that SBI and PNB will be acting soon.
We'll keep an eye out on these developments. Sapna, thanks a lot for that. We in fact spoke to Indian Overseas Bank earlier today, who's one of the creditors in this case, and listening to what the MD and CEO had to tell us there.
Discussions are going on since the time the order came out, and the plan is yet to be finalized, and all the options are being discussed, and those options are on the table. Maybe in a couple of days, the action plan will be finalized. But having said that, from IOB side, what I have to say is that the 760 crores we did get. And in the worst case scenario, even if we are supposed to refund it, I have to say that we are having sufficient cushion in the balance sheet, and this can be handled it can be handled very, very efficiently without creating any adverse impact on the balance sheet.
Okay, let's talk about Coforge. That's been a big mover today. That's now up, I think, close to about 2%. I think we should get up. Sorry, Coforge is indeed up close to about 2%. Let's quickly run you through the numbers. One, the street likes the top line growth. Revenue growth continues to be industry leading, very strong for the company, 3.4% in Q4, and for the full year, it's 32%. Also, it's not just FY25, FY26, in the management's word, is going to be another exceptional year. What's driving that confidence? The order intake. In Q4, the order wins were $2.1 billion at an all-time high, led by the Sabre deal, and the 12-month executable order book is up 48%. So their confidence is not riding on the deals that they will win, but just purely executing the deals that they won in hand. And third, when we asked them about their FY27 guidance of $2 billion, he said very, specifically that we will be disappointed if we don't do better than $2 billion. If all that we manage to do by the end of FY27 is $2 billion in top line, we will be disappointed. We could do materially better. Also, the company said reported margins will be higher by 140 basis points by the time we hit $2 billion. The stock also had corrected 20% on a year-to-date basis, so that is supporting the up move. And finally, the brokerage verdict will come up. Nuvama says it's the top pick in their sector. Their target price is 9,400. Jefferies, 9,000. MK upgrades the stock to an ad with a target price of 8,200.
Now, there are a couple of brokerages that I was reading up. There were price targets in excess of 10,000 rupees as well. So it was very, very bullish commentary on Coforge from the management and from the brokerages as well. So let's hear it from the horse's mouth. Sudhir Singh, the CEO at Coforge, spoke to us earlier in the day, and this is what he had to say on the road ahead for the company.
FY26, we believe, is likely to be another exceptional year. We are extremely strongly poised. At this point in time, our 12-month signed order book is 47.7% higher than at the same time a year back. And you might have noticed that through the year, which was FY25, the total order book came in at $3.5 billion US. We'd be very disappointed if all that we did in FY27 was just hit $2 billion. We believe we have a shot at doing slightly more than that. Our sales approach tends to differ somewhat in that we focus on large deals driven growth. What that means is we're looking for wallet share increase. We're not just looking for or waiting for client budgets to go up or go down and to then keep moderating or taking up our guidance. We go for large deals, 14 large deals in FY25, 5 in the last quarter itself is a testament to that.
There's one more IT company you should watch, and that's KPIT Tech, because they've made an acquisition. You know, I think if you remember that KPIT Tech in all their conversations, the last few have been talking about how they need to be present more in China, because China is leading the entire EV revolution. In terms of technology, they're right on top. So KPIT needs to enhance its presence in China. So they've done an acquisition which helps them. So the company's made an acquisition today. It just came out at about 10:15 of Caresoft's engineering solution business for $191 million. Two reasons. One, it strengthens their focus on the commercial vehicle segment, basically trucks, off-highway segment. So that's a positive. And secondly, the company says it will accelerate their presence in China. The company they've acquired has a deep understanding and relationships with Chinese OEMs and suppliers, and they have a long-standing presence in China, which will accelerate KPIT's foray into the country. So two reasons. One, commercial vehicle. Two, the China presence. This acquisition of $191 million that I spoke about will include a $25 million variable consideration, which will be paid in cash or other equity shares in the next 4 years. So that's contingent on the performance of the acquired company.
Making moves is KPIT Tech. It is interesting because the management continues to remain bullish on the prospects going ahead, even though they did not offer specific guidance during its earnings for FY26, although has been the norm previously as well. Although the management, of course, they spoke to you and they mentioned that they continue to remain bullish on the road ahead.
They said they'll revisit. You know, once things settle down, maybe they'll come back and give a guidance for, you know, FY26. But as of now, things are just too uncertain and fluid.
Too uncertain indeed. And joining that list of this whole host of companies who are either suspending guidance or are refusing to share what lies ahead for them. But we take a short break. The Nifty still at that 24,400 mark. Discuss market technicals with Mitesh Thakkar and trading ideas on the other side. Stay tuned. Welcome back. Still at that 24,400 mark is where the Nifty lies. There are a lot of earnings that we need to be watching out for in today's trading session. Of course, just before we get to that, look at CEAT. That too, after some very strong management commentary, is growing from strength to strength. Another 4.5% higher on that stock as well. So positive moves coming in from CEAT. Of course, that is also a derivative of the fall in the crude oil prices, which has had an overall cascading cascading effect on a lot of these oil sensitives, including tire stocks. CEAT, the last 1 month is up 25%. Coforge, we just spoke about that in the previous segment, is off the highs of the day, but that of course does not take away from the fact that the stock has rallied almost 22% in the last 1 month. So the move they've already seen before the results as well in Coforge. And pull up HPCL, that too is reporting results today. So keep an eye out on HPCL. There was a very sharp mover yesterday, Reema, and it's down at the lowest point of the day now, 2.5% lower, but of course another 12% surge in the last 1 month.
Actually, both BPCL and IOC came up with very strong numbers. They were a big beat. Their marketing margins were aided by inventory. Refining margins were also higher than what the CNBC-TV18 poll was. So let's see what HPCL does today. Today is, of course, profit booking because yesterday it rallied on the back of the plunge in crude oil prices.
And HPCL is also having the biggest exposure to the marketing segment, so it'll be interesting to see how this fares after considering how peers have...
No, sorry, there was IOC, which has the LPG under recoveries higher.
So that is also one of the factors. And even Sudarshan, we were speaking to him in the morning and he was mentioning that the Q4 numbers may not matter much for these oil marketing companies because the fundamentals have shifted very drastically when you compare the fourth quarter to the first quarter, be it the crude oil prices, be it the fall in, be it the appreciation in the rupee. And as we speak of Sudarshan, he's on screen, but he's not here to talk about HPCL. He's here to focus on Mahindra and Mahindra, and that's because brokerages continue to remain positive on the stock, expecting the company to continue its outperforming industry growth, Sudarshan.
So in a weekday of trade, one sector is buzzing in trade, and that is the auto sector, and especially one company that is amongst top Nifty gainers is Mahindra and Mahindra, on the back of consensus buy that we are seeing from brokerages after company reported a strong set of earnings in Q4 of FY25. Even outlook that company has given for both its segments, auto as well as tractor, is looking very positive for auto segment. Company is saying for both SUV plus EV growth range that company is saying it would be in high teens, and even it's almost the same for tractor segment as well. Now coming to the brokerages, Kotak Institutional Equities maintains buy call target here is 3,500 crore. It believes that company is going to continue outperforming industry growth, and tractor segment especially is expected to continue its uptrend in Q4. Company has reported margin of 19.4% in tractor segment, and that was at a multi-quarter high level. Coming to Jefferies, it also maintains buy call, and target here is 4,000 per share. It says company has delivered 12th consecutive quarter of double-digit EBITDA growth, and it believes that it may report 12% volume and 18% core EPS CAGR over FY25-28. And further to that, Jefferies believes that there is a further room for re-rating as company may report a strong growth in FY25 as well as franchise is improving too. And for Jefferies, it remains one of the top picks. For CLSA, it maintains outperform call and it has increased target to 3,652, and it says that ROCs and new BEVs will help it further push market share in SUV segment going forward. Last is Nomura. It also maintains buy call. It has increased target to 37.79. It says company has reported industry leading results, and it also has Mahindra and Mahindra as the top pick, and it expects SUV CAGR at 14% over FY25-27, and it believes the electric vehicle, or say BEV, that is born electric vehicle, will be a key driver going forward for Mahindra and Mahindra. So after a strong set of earnings for Q4, all the brokerages too have positive stance on Mahindra and Mahindra.
Indeed.
Thank you very much for that. M&M till sometime back was the top Nifty gainer with a 3% up move. Now it's overtaken by Bharti Airtel, and Bharti Airtel is now back at record high levels, crossed the 1900 mark. So that's the top gainer right now on the Nifty. Now, Pharma is in focus after US President Donald Trump signed an executive order to boost US drug manufacturing. Ikta is joining in with the details.
Well, thanks for that. You know, the larger picture for the Trump administration is to probably move a lot of the production when it comes to pharmaceuticals back home into the US. So this executive order was exactly focused on that. It aims to fast-track approvals for the US-based manufacturing plants and increase inspections and fees for foreign facilities as well. They've mandated public disclosures of API sources and public disclosures of non-compliant overseas facilities. Now, overall, analysts say that, it is not really a disincentive when it comes to overseas manufacturing. The move is to actually accelerate US-based approvals. So the larger picture is to shift the balance of the global pharma production. If you know already, the likes of J&J, Eli Lilly, Roche, Novartis, all of them have already announced investments in the US. Now, the other bigger thing to watch out for is the pharma tariffs. The pharma tariffs could probably be announced in the next 2 weeks by the Trump administration. They've already, or they are close to concluding the Section 232 investigation by the US government, which basically examines the national security implications of importing drugs and APIs. So overall, that would be the larger picture to watch out for. As of now, analysts say that companies with a manufacturing presence in the US could be more resilient, such as Aurobindo, Cipla, Lupin, Glenmark. Those with a branded portfolio such as Ajanta, Torrent and Alchem could also be better placed. Valuations, however, till there is more clarity for all of these Indian generic companies would be under pressure.
Thank you very much for that. Mitesh is now back with us. Mitesh, slip some more. There is some, you can't call it momentum, but now we're closer to 24,350 on the way down, inching towards a 100-point loss. What have you made of this little bit of a slide?
So, good afternoon. I think, there's some more evidence that we're back into the consolidation zone, which is basically 24,500 to about 24,000, maybe in the worst case 23,850. I think we've been trading near the upper end of the range. I think a good chance that we will possibly see the markets get lower to about the low end of the range. There's a middle point pivot at 24,240, but that's the first support area, and eventually I think we can even test 24,000. So basically, it looks like consolidation time in the markets.
What about specific stocks, Mitesh?
Yeah. On the stock side, almost I have one buy and one sell. Canada is a sell with a stop at about 166 half for targets of around 155, 156. And M&M is on the buying side. It opened well and then slightly slipped off. So giving you a good entry point for short-term traders. Keep a stop just below levels of 30.18 and look for a target of 31.50.
What about some of these oil marketing companies, Mitesh? HPCL, BPCL. HPCL is reporting results today. It had a very strong move yesterday, giving up some of those gains. What are the charts indicating going into the results?
See, I like all of them. In fact, the entire pack does look interesting to me. And I would be buyer on declines. The strongest in the short term does look like IOC. It's had a rally from about 135 to 150. It's coming back. I think around this 142, 143 mark would be a good entry point with a stop below 138 and 155 kind of a target can be looked at. Similarly, HPCL, BPCL also have had some rally, and you would want to buy them, but the strongest to me, for me, is IOC.
Thank you very much, Mitesh, for joining in. Get into a break. On the other side, we'll talk markets with Tridib Bhattacharya from Edelweiss Mutual Fund. Stay tuned. Welcome back. As promised, let's talk markets. Tridib Bhattacharya from Edelweiss Mutual Fund is now with us to discuss the market fundamentals. Tridib, you've been fairly positive on the markets the whole while. I mean, you've not held on to a lot of cash positioning as some of the mutual funds have. So what has been your approach now? So first, the fall in the first quarter of this calendar year, then this big snapback and recovery in April. What has your positioning been and what have you been doing?
Yeah. Hi. Hello. Thanks for having me on your show. I would say that all this while markets have been making a transition from an extreme macro uncertainty, which was there beginning of the year, when we had no clue about our own country's spending, about Trump's spending patterns, and also the geopolitical issues, to now where two of these major issues are kind of resolved. The only issue that is left unresolved is the earnings uncertainty, which we are kind of going through as we speak in the earnings season. And markets have been climbing this wall of worry over the last 2 or 3 months. And you're right. I mean, we haven't held cash, and hence, when the market caught a good bit of coming out of macro uncertainty, we caught that we were positioned in the right way. But we still think that the earnings part of the uncertainty is still not gone away. I think it will take probably a couple of quarters more to come back. But that's lesser of a worry than the big uncertainties that have been looming large on our markets, over the last few months.
Trideep, good morning. Thank you for joining in. So by when do you expect this earnings uncertainty to stabilize? And once that does so, or even in the current juncture when it has not stabilized, is there a pocket or are there pockets where you would look to deploy some of your funds? You've not held on to much of your cash. So where have you deployed those funds?
Yeah. So, overall, the context I would lay out is, since national elections last year, economic decision making in India actually suffered till about December last year. But Jan, Feb, March onwards this year, we have started to see economic decision making pick up. That has resulted in order flow announcements in various different sectors like defense, infrastructure, etc. Now, for this to translate into earnings, it will take a few more quarters before companies actually take action. So putting these together, and also if you look at the consumption softs that have been given in the budget, crude oil fell about 25%, which is a meaningful fillip, and also rate cut. My sense is as we get to the second half of fiscal year 26, we will get an earnings rebound starting to come through, particularly in the consumption side, where I think the ducks are lining up quite well. So, as you said, that the areas that we have been deploying money in the weakness that we have seen since the beginning of this year have been in areas like consumption, have been in areas like rate beneficiaries like NBFCs, where valuations are still reasonable. And third, select consumption areas like, for example, tires, where we think that along with rate cut beneficiaries, the input costs will also stand to kind of help them in good stead as we get towards the back half of this year.
We'll come to that. By the way, look at the way the markets are sliding. The mid-cap index is now down 1.33 percentage point. Commodity names are slipping. So you've got Nalco, SAIL, Hindustan Copper under severe pressure. PSU banks have been weak. Bank of Baroda, which reports its numbers, is down nearly 2.5%. But even a PNB bank is sliding right now. Stocks like a Unicommerce eSolutions came out with numbers. Numbers look good. The stock was up 10%, but now it's up only close to about 5%. So there is pressure, which is visible. And across the board, the entire Adani complex is seeing profit booking after yesterday's big rally. So Total Gas down. You also have cuts coming through in Adani Green, Adani Ports, Adani Power, Adani Energy Solutions, across the board. 2 to 4% gone on that. Tell us a little bit more, Trideep, coming back to the stocks and the themes that you like. Tire, you said that the commodity prices, the decline in commodity prices, or perhaps the input for tires could be benign, and that could be a driver for earnings growth for tire. In tires, which is the segment that you like in particular? Which one would you bet on?
Yeah. So tires as a sector has gone through a good round of consolidation over the last few years. They have become a little more capital disciplined, which they were not there about 4 or 5 years ago. So the sector health has improved. And on top of that, now we have a situation where capacity additions are a little limited. And particularly in two-wheeler, companies exposed to two-wheelers and replacement tires are the two areas that we are positive on. And we think that from a profitability standpoint, margin standpoint, things might be scraping around the bottom. Of course, there could be demand-related challenges if the global growth comes off and stuff like that. And hence, we like domestic tire companies which are exposed to domestic space, a higher replacement segment, and also two-wheelers. These combination is, I think, a good combination to kind of look at a few select tire names within the space where things could turn out to be well over the next few quarters.
Now, what about the wires and cables space, Trideep? This has been in the news for the last couple of months. Ever since the news of Ultratech entering this field, it has suddenly sparked off a huge interest in this entire area for the likes of the incumbents. We saw one of these companies report results the day before. It had a very strong reaction to it yesterday. It's continuing from that in today's session. There are a couple of others reporting results today as well. Now, in the view of this rising competition, where do you position yourself within this building materials space, if you could put that wires and cables into it? And or are there better opportunities other than wires and cables, just because there is this fear of competition intensifying?
Actually, we are long this space right now. We think that as an ancillary play to real estate, where real estate stocks and sector have done quite well, building materials and also wires and cable plays into industrials as a combination is a good place to be from a growth standpoint. Yes, the competition in this sector, like in few others, have actually increased. There are many other sectors like paints, cements, where high gross margins and reasonably decent margins are being challenged by high competition. That I think India Inc. will have to grapple with as listed companies. That's a separate challenge. But that said, the demand-related drivers in this segment continues to remain robust, which is what you saw in a couple of results that you've seen in the past, and I would say that you would see in future as well. That doesn't shy away from the competition-related concern, which will come in a couple of years' time. But what we need to understand is companies with strong positioning, with moat in the segment that they operate in, will continue to kind of get a fair share of the profit pie. Because in this segment, to get capacity, get the approvals in, and to operate takes itself about 2 to 3 years. So it's easier said than done.
Okay, it's the performance was fairly electrifying for RR Kabel at least, and the stock is still continuing to hold up. What about Mahindra and Mahindra? Is that a stock that you'll own in your portfolio? Because that continues to surpass estimates.
So in your question related to tires, as I said, one of the favorite segments within autos and auto ancillaries are basically two-wheelers and tractors. While I can't be stock specific, I think companies which are exposed to those two subsegments are areas that we are overweight with regards to OEMs and also wherever we can find exposure to in the case of ancillaries. And I think the numbers of some of the companies that they have reported so far bear that out. We continue to remain positive in that space.
Well, Pradeep, there's this other almost consensus trade is the banks, private financials. Everybody has been saying there is value in private financials. There is value in private financials. Yes, there have been moves where HDFC Bank and ICICI Bank have hit record highs just recently. But in absolute terms, well, ICICI Bank may have outperformed, yes, but for HDFC Bank, the returns have been almost close to negligible, even if the stock is at a record high. What do you do in private financials? Do you stick to this proposition that, okay, fine, there is value, so I will stick to it? Or do you go looking for pockets where say, okay, fine, I'm getting returns, value or not, or value or no value?
So we are big proponents of looking at valuations, particularly for financials, because it operates between the liking space of FIIs as well as domestics. So around about late last year, there were extremely tight regulations. Valuations were on the lower side, and the previous quarter numbers were quite bad, relatively speaking, for financials, particularly the banks. And in that context, that's when we actually increased our weightage relative to financials in general, and have been able to kind of play this rally through with the right stock selection. At the moment, though, we think a good part of that rally is done. We think that low-hanging fruits with regards to low valuations, very tight macro conditions has given way to easy macro conditions and reasonable valuations. So from here on, stock-specific execution will be more dominant than valuation as a factor. And hence, we've actually, in the sectors that I mentioned, that's why I mentioned NBFCs relatively as a space where we still remain kind of overweight, because we think that rate cut beneficiaries with regards to their earnings is yet to play out. But I think a good bit of banking rally banks overall, particularly PSU banks and select private sector banks, have done their bit over the last few months overall.
Thank you, Trideep, for joining us today. Need to get into a break. As we do that, some good news for our viewers, because India's business news leader is now just a click away. Introducing CNBC TV18's all-new app. You can get instant access to all our breaking news stories, our articles, financial world updates at your fingertips. So download the CNBC TV18 app now from the Apple or the Google Play Store, or just scan that QR code on your screen.
Welcome back, and convincingly below yesterday's low now. 24,365 is where the index is. 100 points lower is where things stand for the benchmark index at the lowest point of the day, and led lower by Reliance Industries and SBI too among the top contributors. On the downside, HDFC Bank, which stood tall yesterday amidst the pressure from all the other private financials, and SBI, it is today contributing towards the downside. But what's contributing to the upside is Bharti Airtel, as Reema was just mentioning, back at record highs. Mahindra and Mahindra too packing a punch in today's trading session. Now, interestingly, Cummins has again extended some of its losses. Now is down 5.5% as we speak. RailTel is down 4% as well. Sonata Software among the other losers, as is Kalyan Jewelers, losses of anywhere between 3 to 4%, but holding on to gains, and firmly at that is CCL Products, 14.5% higher. We'll be hearing from the management shortly. It'll be interesting to see what they have to say on the road ahead for the company. Shifting focus then to the earnings season, as we have been focusing on all through the last few weeks. Godrej Consumer, one of the big names, reporting results today, and they've already come out with their business update. But Mangalam is here with more on the potential fine print for GCPL. Mangalam.
Well, for Godrej Consumer, remember, after the debacle of the third quarter, the company has been focusing on reviving volumes, and that's reflected in the stock price as well. It's up around 18% this year itself, and there is recovery expected. Trading at around 47 times, largely in line with its previous 5 years average. The management has said that underlying volume growth in the fourth quarter is likely to be in the mid-single digits, and India revenue growth would be in high single digits as well. Club all of those numbers together on a consolidated basis, the street is expecting a revenue growth of around 7%. EBITDA actually declines by about 3.5%, which means there is a decline in the margins by about 200 basis points, and the net profit comes in at 483 crores. The absolute number is more important here versus the comparison, because remember, in the base quarter there was an exceptional loss of nearly 2,400 crore rupees itself. 4 to 5% is the street's estimate of the company's guidance of mid-single digit volume growth, mid-teens underlying volume growth in home care, and there has been a decline in personal care. Why is that? Because of the big price hikes that the company has taken in the soap portfolio, which is transient in nature. Indonesia business is expected to deliver mid-single digit underlying volume growth as well, and there is stability that is expected in Indonesia along with recovery in Africa. The key to track, remember, tomorrow the management will be hosting a press conference where they will unveil the outlook for FY26. So the FY26 and the near future strategy is something that the street will definitely pin its hopes on.
Thank you. And what about MGL? Sudarshan is now back with us to talk about what to expect from Mahanagar Gas this quarter.
So after IGL reporting a strong set of earnings, we are expecting MGL to report the strongest set of earnings amongst all the city gas companies. We might see an improvement in the margin on the back of the price hike, and the price hike taken by MGL was the most amongst all the city gas companies. So on the back of all these factors, also remember that like all these oil marketing companies, internals for even city gas companies, if you compare with Q4, now in the last 1 month or say 1.5 month of Q1 FY26, internals have improved. Crude has fallen, rupee has depreciated. So all these are like going to benefit city gas companies, not in the results of Q4 FY25, but going forward. Now coming to the headline numbers, profit may fall by 6%. Revenue is likely to come almost unchanged around rupees 1,784 crore. EBITDA may increase by 2%, and margin too can see a minor expansion and can come around 18% or might be more than that. Now coming to EBITDA per SCM, which is one of the most important metrics for city gas companies, also known as the realization or say margin. EBITDA per SCM for MGL is seen rising 5% sequentially, but year on year, it might see a big fall, but more than year on year, what would be tracked closely is the growth that might see on a sequential basis. Now, in absolute term, EBITDA per SCM can come around rupees 8.73 versus rupees 8.30 that company had reported last quarter. Now, what exactly we would be looking in the management's commentary? First, if you remember, recently Maharashtra government has announced EV policy. Now, we'll have to see if there is any update that MGL has heard from Maharashtra government, and if government is taking any action related to transition, like what we have been hearing from Delhi government. Again, Delhi government is also draft, and after that, minister had said that all these details that have been out in public domain are not correct. So we'll have to see what's the update from Maharashtra government. And second, if companies planning to take another price hike to protect the margin, we'll have to see that. And what would be watched very closely, that after price hike that MGL has taken of rupees 3, has it managed to control the volumes, or has it managed to see the volume growth despite that?
If you're a layperson listening to this, you would have answered all the questions with this very detailed explainer that Sudarshan has put out as to what to expect for MGL in this quarter. We take a short break, more on the markets, but we put the spotlight on what has happened in the Taiwanese dollar over the last 2 days. Stay tuned.
Welcome back. Cummins has slipped a little bit more. It's down over 5%. It had a gap down opening after the global parent company withdrew its guidance, the forecast for the full year, citing tariff-related uncertainty. They also indicated that the revenue of all Cummins entities in India, including the JVs, is down about 14%. So that has spooked the street to some extent. So Cummins is one of the big, drags today. Other than that, you've got Indian hotels too, which is down nearly about 4-5%. The numbers were fine, but the stock is weak in trade. Bombay Dyeing is reacting negatively to its numbers, and Bombay Dyeing has slipped about 4.25%. CAMS is down 2%. These are stocks all reacting to the earnings performance that came out over, just yesterday. On the way up, CCL Products has been a big mover. That's 14% higher. Unicommerce up close to about 5%. Again, an earnings reaction there. And RR Kabel continues with its gains from yesterday.
Oh yes, RR Kabel building on to those gains, and how 6.25% higher. And they are the ones building on to those gains. But the index, though, continues to remain 100 points lower. A stock that has come up in the last few minutes is Poly Medicure, and that is the second best performer on the Nifty 500 index as we speak. 6.5% higher on that stock as well, continuing to maintain those gains. 2760 is where Poly Medicure is. The last 1 month, the stock has surged 33%. So sharp gains for Poly Medicure. What is also holding on to gains is Newgen Software, 4.5% higher on that stock as well. And if you look at the top volume-led gainers, DCM Shriram is off the day's high, but is among the top volume-led movers in today's session. 4.25% higher on the stock is DCM Shriram. And Narayana Health now moving towards levels of 1850. Another 3% added to the stock in today's session.
Godrej Agrovet, I don't think we've spoken about it, 4.5% higher. Kotak has upgraded the stock today. So Kotak has upgraded the stock to a buy, calling the recent sell-off in the stock unwarranted. So Godrej Agrovet is now upgraded to a buy from an add after what we consider an unwarranted sell-off in the stock following the Q4 results that was subdued but along expected lines in a seasonally slow quarter. The company in the conference call cited a positive outlook for FY26. They have guided for a 16 to 18% revenue growth and earnings for FY26. So Godrej Agrovet has got that kick out today.
It shows that some recovery seeing from the lower levels for Godrej Agrovet. And of course, Yes Bank, off the highs of the day, now open 9% higher, is now up only 2% after CNBC-TV18 citing banking sources said that the earlier report that was calling for Sumitomo's acquisition of a 51% stake as incorrect, and the stock has come off significantly from the highs of the day. But with that, we call wrap on this edition of Trading Hour. From Reema, me and the team that put this show together, thank you so much for watching. Power-packed halftime report takes you through the next 60 minutes.